All right. Welcome to the beginner's trading session. Um, we are going to discuss market structure and your submissions that you submitted in the chat. And there were some interesting ones. What I didn't ask you to do was identify your breaks of structure and your market structure shifts or change of characters, which I think is very important for you to know. And we'll go ahead and go through um, what everybody submitted. So, based on what Mike submitted, this was pretty good. There was some. Um, this was pretty good. What I wanted to see was, uh, okay. Is it gonna let me? Okay, yeah, good. What I wanted to see, yes, this is a swing, and when you get a pullback, this was a pullback. Now, this is what I need for you all to understand because I know we talk about shift of structure, right? So in this move here, in this move up here, um, you have internal moves. So you have this move here. Let me let me change the color or change the um, okay. In this move, you have these internal moves here, right?
Yep.
So once you see, a lot of times you will see a shift in structure. Now, because I don't know what's going on over here, I I I can't really say what's going on. So I don't know if we're bearish or bullish or which one. Um, because if we're bearish, then that would make sense that price came up here. There should be some kind of, for me, some kind of supply zone for price to come to and then shift structure. So I can't really say if we were pushing up into a supply zone or um or not, but I will go to the chart and look at that in just a second. So, based on the daily, there was a market structure shift, and then price pushed up above the swing high. Now, with that being said, once you get a break of a high and then you get a pullback, and this is your high or low, once you get a break of a high, once you get a break of a high, this becomes the higher low. So, what I'm trying to get to is that once price pushed up here and gave you this high and pulled back and gave you this low, this is just a low until price breaks the high. Once it breaks the high, then it's considered a higher low. Does that make sense?
Yeah.
Everybody, does that make sense?
It does.
Yes.
Okay.
Yes.
And the reason I'm saying that is because there was a shift in structure. So the thought process would be this would come back and sell. So this would then be this would just be a low until price breaks this high. Um or until price breaks this low to be a a lower low. But because that didn't happen, because price broke the high, this is officially a higher low. Okay. So now, once price broke this high, and I'm marking here because I use breaks of wicks and not open and close of candles. Okay. Once price breaks that high, technically, this is the swing. This is the last swing. And yes, you have an internal break here, and then the pullback, and then the internal. So, but based on market structure, because this is the higher time frame swing, you're waiting for price to really come back here to continue with the high. But because, and I don't consider that I don't consider it's a shift in structure, but this is the swing, right? So until price breaks this low, this is now the market structure shift.
Okay.
And yes, you could, once the price broke this low, you could get in on the pullback. You can get in on the pullback. I would have expected price to pull back to here. Once it didn't and it started breaking again, then I'm looking for price to pull back to the next supply zone. And then once you get another break, then I'm looking for price to pull back to the next supply zone. And then once I get a break, I'm looking for price to pull back to the next supply zone. If it doesn't pull back to that supply zone and gives you another break, so once this pushed down, pushed back, and then gave another break, then this is my new supply zone. And then once price breaks here, this is my new supply zone. That's where I'm looking for price to pull back to. That is where you get in on your entry. So, with that being said, um, so price pushed, and then pushed here, pull back a little bit, and then pushed here. And so this would, for me, would be the last swing. So once price breaks this high, and I like to explain the purpose of me using the wick because when you're using higher high and higher low, it's talking about the candle anatomy. If we know about the candle anatomy, right, we know that this is the open or close, and this is the open or close. This is going to be the high, this is going to be the low. So when the market is saying a higher high, it's talking about the high of the candle, the high of the candle anatomy. That is why I don't use a open or close high or open or close low because I'm not talking about the open and or close of the candle. Does that make sense?
Yeah. Is it also because on the lower time frame they're actually full candles?
Because it's what?
On the lower time frame, the wicks are actually full candles.
Right. So on lower time, when you mark this as your higher low or higher high, the as you go, it's dynamic. So as
Hmm.
you change time frames, that is going to change. The wick, the high and the low of that wick will not change.
Hmm. Hmm.
So that is why I look for candle close. I use the wick. Now Todd teaches something else. Todd teaches um the body. I personally don't, um, and that's just my trading strategy. So I say to you is as you're taking notes, you're gonna have to identify how Todd trades and how I trade and decide which one works best for you. So I'm gonna go back. So what I want to do now is share which I don't know what pair this was.
This was UJ.
UJ. Okay.
Yeah, USDJB.
So let me share my trading view. Where's my trading view? Mm, Oh, let me share trading view. Um, let's go to UJ and go to the daily and let's see where that was. See where that was. Mm, that working. It looked like it was right here.
Between September and June, I think.
Here. Okay. So we had a break of structure here. Um, oh, okay. Okay. So now when I look at the full picture,
Hmm.
right? So this was my high at some point. It did not break structure till over here. So as crazy as that may seem, this is my swing low because price did not close above this high until over here somewhere. So that means everything from the top of this high all the way down to the lowest point where this high pulled back from is part of the swing. And when I tell you how important to know this is, I cannot stress it enough how important that it
When
is.
you say part of the swing, do you mean like part of the structure?
Huh?
When you say part of the swing, you mean like the structure?
What do you when I say part of the swing, like from
Yeah.
from this high point?
Yeah.
Yeah, so when this high point happened, it pulled back, right?
Hmm.
Or it started pushing up again to break this high. So
Hmm.
this is your swing low from this
Hmm.
high point. And once price broke structure, this is your swing point. So once price gave you a change of character, and hold on, that was a swing low. Let me mark it. And this was your swing high. This is your swing high. So once price gave you and then you have these internal, you have all these it's all these are internal at this point.
Hmm.
So you have this push up, this pull back, this push up, this pull back, this push up, this push back. Um, this push up to here because price didn't break till right here. This pull back, and then this push up. So your push ups should be um, breaks of structure until you get a pullback. So this push up, pull back. So these are your internal for this swing move. Once price gives you a market structure shift or a change of character, whichever you prefer to call it, okay, you want price to pull back into, and I'm going to fib from here to here. You want price to pull back into, at this point, because it's selling a premium zone. So 78 is is my where my alert would be triggered. Okay. This is the
Mhm.
78. This is your 88. So if you are like me, I'm just going to set the limit, but you have to remember you have to cover the high. This is still the swing high at this point. So if you're setting a limit, you better cover that high or prepared to be tapped out. Okay. And the goal is to take it to the swing low because that is what we identified as the swing low. Now, or to the 78 of this higher time frame swing. So if I fib this up move, because we're still bullish, we're still in a bullish range. Let me say it that way, because technically we are bearish, right? But we're in a bullish range. This is the bullish range.
Mhm.
So price can come back to 70. It may not hit, it may not tap the swing low. Um, so I would say at least to the 78. I mean, that's more than enough. 2,000 pips is way more than enough. Okay. So you have a 78 at a demand zone here. The 88 is here. So if you just like when price pulls up, just like when the shift happens and you mark up your 78, you can set an alert. Once price gets there, you can go down to a smaller time frame, and I'm just going to go down to the 4 hour. You can go down to a smaller time frame, and as price is in your zone, identify a break of structure. Identify your break of structure here. Identify your swing low and identify your swing high every time. And as soon as price, and let me mark that swing high. So when y'all go replay this, y'all can see this. Swing low. Okay. So, and then once price breaks this high, then you move your, I mean, it's almost the same, but you can still move it. You move your swing low, you move your swing high, okay? And then this was your break of structure. So you just keep moving your swing high, swing low. And as you can see, price from here to here is your swing. Okay. So all of this is, let me turn this off so I can. So all of this from here to here is your swing. Okay. So now when price breaks this high again, right here, this is now your break of structure. This is now your, I meant to move the other one. That's okay. This is now your swing high. Okay. And then this is now your so price came up, price pushed up, and then price broke structure. If you want to move your um swing low here, not if you want to, you should move your swing low here because this is where price broke structure. Okay, so now this is your swing low right here. And I like to make it as precise as possible. That is why I use the magnet over here. So once price breaks your swing low, right? I personally mark up and then I go down in my time frame to look for a precise entry. And I'm going to go to the 15-minute. Okay. So once I get to my 15-minute, I well, let me just say this. I look for my supply zone on the 1 hour. Okay. I look for my supply zone on the 1 hour. So for me, the last up candle before this down move is here. So this is my supply candle, supply zone. Okay. So you can either mark it up on the 1 hour, and I'm gonna go down to the 15-minute to show you. Oh shoot. Yeah, that's right. So that went down to 100 pips. Now 100 pips is too much for me. Okay. So then I will go to the 30-minute. And this is just how I narrow down my supply zone. As you can see, the candle is still the same. So, and then I go to the 15-minute. I keep the zone marked up, but then I identify this zone here. I'll put this here. If you want to put a line, you can put a line, or if you want to put another box within a box or square within a square, um, I put this here. So, and I will always put my alert on my 1 hour. I would put an alert on this because 100 pips is I'm not covering 100 pips, okay? Um, I'm not setting my hedge or stop loss to 100 pips, put it that way. So then once price gets to this zone and my alert goes off, so price came down here, pulled back to this zone here. Now, you will probably say, then I'm going to go back to my 1 hour. I do not look for market structure on the 15-minute because it will trick you out your trade. I'm telling you right now. And what I mean by that is, let me go back to the 15-minute. I'm going to show you. What I mean by that is 15-minute is only for me, only for entries only. So the fact that we had a break of structure here or a change of character here, and then we had one. So that makes this the swing low, and then this is the swing high. People will see this and say, oh, it broke structure. It did not break structure. It will trick you out your trade. And I'm putting this there to show you on the 1 hour that if you're on the 1 hour or higher, you will not get tricked out your trade. You will assume this is a change of character for the pullback to continue selling, all while price is still buying for for about 40, 44, 45 more pips. Okay. So if I go to the 1 hour and I look at my zone here, this would be my change of character to the top. I know people say this is right here. I don't consider this. But why? Why don't I consider this when the break of structure? Why don't I consider this the break of structure? Anybody?
Is it because of the wick?
Because of
Hello?
the wick what?
Because it's not a full body?
Because candle did not close below the wick. That makes sense?
Yes.
Okay. Candle did not close below the wick, so I do not consider that the break of structure. I consider this one the break of structure because the body closed below the wick. Let me just do this. Body closed below the wick. So everything from there up is my swing high. Everything to that high point is the swing high. So I include all of this as the push down and this my swing low. So now price has to, once price broke this is now my market structure shift. This is now my swing low. And this is now my swing high, or right here. This is now my swing high. Okay. So price broke structure.
Kim, you wouldn't hello?
Yeah.
Kim? Wouldn't you consider this like the internal structure? I've heard you say something like internal structure before.
This right here.
Like, yeah, so all this here from the right to the left before it broke down, is that not like an internal? I've
This
heard you say internal something before,
this is
so I just wanted
internal.
to know.
This is internal right here because all this is going selling
Okay.
down. But you didn't get this. So once this breaks structure right here, because remember we already marked up that
Mm-hmm.
this and this was the high. Once you got this break of structure, you're looking for the pullback. So my point to looking at the pullback was price broke internal structure. And because price broke this was a low and not a swing low right here. This is where people get
Mm-hmm.
confused. This is where people get confused because price broke this low, closed below. People make the assumption that that is a shift of structure, but
Mm-hmm.
it's not because that's not your swing low.
Okay.
Okay.
Yeah.
Does everybody understand that? I know it can be confusing, but once you learn it, I'm telling you, you will be unstoppable once you learn it. So this was the market structure shift because this was the internal swing high first. This was the first internal swing high. Price shifted structure. pulled back, and I guarantee you, if I fib it, it's probably the 78. Price pushed up here, tapped the 78, and pushed all the way up to the negative 27. Like clockwork, like it's clockwork, but you have to know market structure. You have to be clear on market structure because I see Tide do it sometimes. If y'all see me put the googly eyes, that means I'm looking at something different. But this is not the shift in structure right here. Always remember, price has to break your swing low or your swing high in order in order to look for the break of structure or the shift in structure. Any questions on that?
Good.
Now, if price had pulled up here, wick this right here, came right here, didn't take out this swing high, and then started taking out the lows, then I would say you could look for the continuation of the down sell. But because price shifted structure from here, you want to mark up, and I say mark up supply or demand zone. If you trade like Tide, you're going to look for an imbalance. Nowhere
Yeah.
in here. I don't do imbalances. I don't do imbalances. So in order to find that imbalance, you probably would have to be on the 15-minute, which was there's one here. See that, and this is why I don't do imbalances. Like I don't have time to be marking up a ton of imbalances on my chart. So you have one here, and then you have this one here. And so you have the imbalance here, and then you have the imbalance here. And yes, it went to the first imbalance, but based on market structure, you had this swing break of structure here, and then this swing low here. So if you're on the lower time frame, make sure you're marking up the right swing, marking up the right swings, swing low, and this is on the 15-minute break of structure, and then your swing high. And I'm going to say this probably 1,000 times, swing high. Just because you got this change of character here on this internal of the swing, this is the swing right here. Just because you got this internal does not mean it is going to reverse the move. You have to wait for the swing low to be, and that's the difference again with Todd and I. Um, he's definitely going to say this is the he's going to identify this as the break of or the change of character. And so either way wouldn't have gotten in, right? Um, because once this changed character, price did not pull back into the imbalance, which is right here. Price has not pulled back into that zone yet. So, with that being said, any questions on that? Like this is probably the most confusing thing of trading.
Yeah, the first marking when you said this is how Todd would do it, I saw that as well. He would have fibbed that those red candles. and then say wait for the 78 or the golden zone before entrance.
Yeah, I don't trade golden zone either, so that's a Todd thing. But like I said, based on and I see it all the time. I will see someone say this, there's a structure shift right here, and then you will go look for I see it all the time. Like I see it all the time. Okay. Then you'll look for an imbalance probably right here, and you'll get in the trade. And then you'll be in drawdown forever. Then you'll be in drawdown for this is January 13th to the 14th. And then you'll finally be back in profit on sometime the 14th. Now, that's only a day. I don't want to see any drawdown for more than 24 hours. Like, yeah, I don't. I can't do it. I can't do it. Okay. Um,
Me either.
so the key to trading. So even if this happened, even if you saw this, you thought it was a shift in structure. I'm gonna tell you the key main thing is price did not pull back into your POI. If price is not in your POI, meaning this red zone right here, don't trade it. Do not trade it. I'm gonna say it again. Do not trade it. So even if you just marked up this, like once you had a shift in structure, even if you just marked up this zone right here, this first imbalance right here, right? Hold on.
Mhm.
Let me move that. Even if you just marked up this imbalance right here, don't trade it until it get there. Just set an alert because I'm telling you, the market will trick you out your trade. If it is not in your POI, do not trade it. Let me write that down. If it is not in your POI, do not trade. Do y'all understand that?
Yes.
And also, my recommendation is to stay off the 15-minute. You only want to look at the 15-minute for your entries to identify your entries because the 15-minute will trick you out your trade as I just showed you. The 1 hour could never trick me out my trade. And like I said, I am an advocate for a candle close past your swing high or swing low as a indication that price is moving in a specific direction. Meaning, if once price broke this swing high, this is an indication that price is going bullish. If price did not break this swing high and came and broke this swing low, it is an indication that price is still going bearish.
Yeah, understood.
And again, I want to show that the price break um for a body open or close, if you go down in time frame, you will see, and this is what I meant earlier when I said it's dynamic. You will see, um, hold on, let me go to 15 because that didn't happen on the 30. You will see that the open or close will change depending on um, the time frame you're on. And that's it's still the same. That's still the same. The 15-minute gave a um, break of structure. The 15-minute gave, if I'm using my analogy, the 15-minute gave a break here, which means this would be your swing high. So once price breaks here, it pulled back again. I don't use 50% or 618. So once price, if you're using the 15-minute, if you're going by the 15, let me use this. If you're going by the 15, okay, this would be your, if you're using this as your break of structure, I'm gonna remove that. I don't do 50% 618. So as price is moving up, I will move my next one up. And then I'm waiting for price to pull back to my 78. Same thing. Okay.
Yeah.
Any questions on this one?
Mhm.
Questions. Let's go back to the daily. So now that I will say this, now that, and I think I might have said this already, but now that we have a market structure shift, okay? So there was a break of structure, right? And then we had this market structure shift based on the daily. Wait a minute, let me delete all that. Okay. So now that we had a break of structure, we have a swing high, and then a swing low. Okay, so we had this break of structure. This came and broke the swing low. I would be looking for price. This was the swing. Remember to always look at the higher time frame. Okay, so price did come there. Broke. All right, pushed here. Price pulled back to, it pulled back to here. And broke. Okay, I want y'all to forget. I just said that. Forget all of that. Because price, okay. This is why you always have to look at the higher time frame. Okay, so price broke here. Now it wants to work. Okay. All right. So price broke structure there, pulled back to this swing low here, and then shifted structure here. And so we were expecting once it shifted structure here, this is why you have to do a top-down analysis. Price pulled back to, let's fib it up. Price pulled back to 78.88, right? And then shifted structure again. Shifted structure here. So once price shifted structure there, what did it do? Anybody want to guess? Pull back to your discount area. It didn't quite pull back to the 78, but I can almost guarantee you that price may push down to here. It did push back to the demand zone, but there is an imbalance here. Like I said, I don't trade imbalances, but I do know if I go down in time frame, there is a 4-hour demand zone here. And I'm sure if I marked up the 1 hour, there would be another zone to mark up. So price can push up to here and then push back down. I'm going to say this.
Did it not tap the previous high?
The previous who?
The previous high, the one that you.
Right
One
here.
second. No, not that one. The one below. The
The
one
one
below.
above?
They're on the right. Up a bit. Up, right, right. That high on the next high. Yeah, not that high. The other high. Yeah. So it couldn't not tap there and then go down and touch
It could.
the.
It could. Yep. It could. It could come up here and create a whole double top. But so at this point, what I would be doing, huh? At this point,
Sorry, I was telling my mother I'm going to.
oh, okay. So at this point, I would be marking up my swing. This would be my swing high. This would be my swing low, right? And then I would be looking at the internals. This already happened. So this was an internal, this was an internal. So now this is the last internal. So based on this last internal swing, price would have to break this low if I'm going to start looking for sales. So as far as I'm concerned, because you marked up your zone, right? As far as I'm concerned, if price pulls back, I would say it's going to pull back to this zone here and then buy up. That is my thought. Price broke the high. I should be expecting a pullback. I would be expecting a pullback to this demand zone to continue buying up to the zone that I marked. So then if price pulls back and breaks another level of structure, so at that point, if price does this and breaks structure, let's just say this for the sake of today, this is our high. This is our current high. This is our current swing low. If price push and breaks, then I'm going to move my swing low to wherever that point is. This is the break of structure. And then I would move my high to wherever that point is. So you keep following the internal structure until price is broken, until the internal is broken, especially if it does not break this high. Because you want it to come here, it might wick, it might wick the high. If it breaks the high closes above, if the candle closes above this high, then you identify the current swing within there. That way, when it pulls back and breaks an internal low, you can expect price to sell back down to um you can expect you can expect price to sell back down possibly to this zone before taking off. So if price comes and breaks these lows, you look for the pullback, then you can sell it back down to here. And then because we've already looked at higher time frame, price is already pulled into this demand zone. I can't do it right now. Price is already pushed into this demand zone. Now you're looking for price to pull back into this new demand zone to take off. So I am a proponent of, and I tell Todd all the time, like, don't teach the back and forth until they master the trend, right? So based on higher time frame to master the trend, right now the trend is bullish. So, and if I look at this higher time frame, and yes, because we're on the daily, price is bearish. Heck, price can come all the way down to this demand zone here because it has not mitigated this zone right here or this zone right here. So this could sell down to one of these zones, right? Does everybody see that?
Yes.
Yep. Yep.
So if I'm on the weekly and this was my last swing down, and this was my last swing down, right? And I mark up my supply zone. And because prices already shifted in this going up, right? You can at least attempt to buy it up to this zone to then sell it back to this zone. Does that make sense? So,
Mm-hmm.
but I want you to remember that price broke this structure. This was a structural shift, right? So
Mm-hmm.
everything from here to the high. So there are two supply zones. You have this one here, and then once price didn't pull all the way back there and then broke structure again, once you get that break of structure, then you have another supply zone. This is the 78.88 of this move.
Yeah. Mm-hmm.
So if you're unsure, you either wait for price to pull back here or you wait for price to break this low. Anything in the middle, don't do it. Anything in the middle, don't trade it. If you're
Right.
unsure. If you're unsure. So this is all definitely in the middle, and you can trade the middle. Most of us are day traders, so going to the weekly or the monthly. I don't do 2 months or 3 months or I don't do the months because I'm a day trader. I expect my trades to play out within a week, preferably for the day, but I do expect for my trades to play out by the end of the week.
Okay. Okay. So you look at the daily and the 4 hours.
I look at the daily, the 4 hour, and the 1 hour.
Okay. Okay.
But I also look at the higher time frame structure. That's the first thing I do. Look at the daily, look at the higher time frame structure, and then I go down and see where I am in that structure. Like I said, you had this was the higher time frame structure. You had demand zones here. So if I were trading UJ, I would be waiting for price to come down here to my demand zone.
Okay.
I would set an alert here. Once the alert went off, I would identify the internal structure. Once I get a market structure shift in on that internal structure, preferably on the 1 hour, I will sit on the 1 hour until I get um, a market structure shift. Once I get the market structure shift, then I'm putting in for like for GJ, I'm in a buy up to the high. I would be in a buy from, let's just say price pulled back here and shifted structure or somewhere in that zone on the 1 hour. I'm taking my buy up to the high
Okay. Yeah.
because now at this point you should be expecting price to buy up to I'm taking my money here, okay? Because I know it's probably gonna come here, pull back. I don't have time, but it should be going up to here. Now, if I mark up the -27, even though I didn't look too far to the left, if I go to the weekly, there is another zone. Let's go to the monthly so I can see it. Um, so it is um likely going to come back and retest this break. So it'll probably go up to the 618, as you can see right there. The 618 is right there. It is likely going to, you see how it broke structure. You can see the structure right here. It's the low, high, and then it broke structure. Okay, price didn't pull back, came here, broke structure again. This is where your market structure shift happened. And I'm just looking at higher time frame. Market structure shift. So price is probably going to come tap the retest of this break that happened, pull back because price has now shifted structure here. It's probably going to pull back to, let me erase this. Let me erase all this. Oops, I didn't want to erase that. Again, this is on the monthly. I don't necessarily look at the monthly. Um, okay, let me just erase. Let me just do this. Okay. Higher time frame. If you're a swing trader, you have this, this, and this, right? So before all this happened right here, this was your swing high. This is your swing low. And I'm gonna make sure I have that right, because if that is right, that means there's an indication that price is going to keep selling. Okay. All right. So as you can see, there was a break of structure right here. So there's a possible indication that price, as you can see, and then it broke that high. So I am definitely expecting price to pull now that it has broken this high. This was your swing low. Which became your break of structure. Price push up and pull back. Okay. It did break structure on this end, and then it came and broke structure on this end, or shifted. This is now the market structure shift. It was a high that became a market structure shift. Okay. So now I'm expecting price, and in between that swing high and swing low, right? Came break here. You have these internal swings that price is breaking. So once price broke this first internal swing, it's the same thing. Once price broke this internal swing, you expect price to pull back to your demand zone. I'm gonna just mark up this zone right here as the demand zone. Okay. Price has not pulled back there yet, but if you look at the higher time frame, price has shifted structure because it broke above, closed above. Wait a minute, let me fix that too, because that's not even accurate. Like I am I don't play about my structure, so it's got to be accurate. Okay. And as you can see, and I will zoom in, as you can see, it broke. And the line is straight. As you can see, there's the price is the same over here. Okay. So now that structure is broken, I look at higher time frame, and we just gonna stay on the monthly. This was the break of structure, so that makes this my swing low, and this my swing high. When I tell you it's wash, rinse, and repeat, okay? If it breaks below here, it is not technically a market structure shift. I mean, it could be a market structure shift to go back down to this zone to then continue buying up. But I need to see a shift in structure. Again, I'm on the monthly. If I was on the 4 hour or 1 hour, it probably is a shift, right? So if I go down to the 4 hour, as you can see, price closed below there. I think that was the right one. Yeah. Okay. So price closed below there. So, and then started shifting internal structure. So I would be looking for price to, again, come back to this zone here to buy up to, and if you want to wait for structure to shift here and then get in for the buy, you can do that. To buy up to this zone here. And there's a supply zone up in here. And then that could look, it's a ping pong game, y'all. It's a ping pong game. Um, and then possibly look for price. Now, I'm gonna tell you right now, this I really want to see price break this high before I look for a buy all the way up to here. If I'm looking at this, this is what I'm looking. Yes, there is this here, but this is more clearer to me. This is a clear structure break. Yes, price came here, pushed up, but it has to be very clear to me. And I don't even know how to explain that, but I'm just a cautious trader. Let me just say that. But I do believe price is going to pull back and buy up. Okay. Um, before selling back down. Now, again, because I said this is the clear one to me, it could push up to here and then sell. Does that make sense? Maybe.
Yeah.
That makes better sense. Okay. Okay. Um, I forgot where I was talking about.
Push up to sell. This looks better than the other one.
Yeah, this could push up to here and could sell back down to here. So, with that being said, until I see, and again, we're on the monthly, but pretend we're on the daily or the 4 hour, right? This is my swing low. This is my swing high until price comes back to this zone or because there's no structure to me on here other than this right here on this monthly time frame. Of course, as I go down in time frame, I'll see a little more structure.
Yeah.
On the weekly, this is the structure to me. This is the last down structure to me. So that means price would have to break. That's the same one I marked up on I think the daily, um, that I said was clearer to me. And now that I'm on the weekly, it's even more clear because it took out all the noise.
Mm.
So once price gets up here, then I would say determine what you would plan to do, whether to continue selling it down based off of the internal structure that forms. So if price is coming here, 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 here. If you see some structure break from here, this is where you sell high, then you can look for the pullback to sell back down to here.
So once the structure is broken, we look for a pullback to enter.
Yes. Yep.
Not overbought. Okay. And it's a double top as well. So
Uh,
on the monthly, okay, I'll tell you something that I notice. If you go back to the monthly, I noticed that if the chart has a double top, sometimes it mirrors the other side. So you see how we had almost a double top and then another like double top. You see it?
right here.
Okay, so yeah, so basically it went up, came down, went up again and broke that high, retested, went
So,
up again.
and this is again where the market will trick you out your trade, right? Because people look at double tops, and yes, you could have sold it. I don't. I don't necessarily look at double tops as a full sell. Yes, it sold for 1, 2 months, right? And you could have
Mhm.
sold it, but you have to know that based on market structure, meaning price went up, price pulled back, and price went back up. Price cannot break this low. And
Mhm.
you can't see it on the monthly. Let's go to the weekly. Price pushed up, price pulled back, and then price brought back up. So, and then as you can see, price, if you're looking at structure, this was a high that broke structure, which made this the swing low. Or you could, if you wanted to use in smaller time frame, this was probably the swing right here, the change of character for the pullback to this um this zone here, for the pullback to this zone here, right here, to then sell back to this demand zone here. You can only take it back to the current structure that was formed. So once price broke, let's go down to the 4 hour. You see, once price broke, it pulled back into the zone and then started selling some more. It didn't pull back as far as I would have liked for it to pull back, but I would have missed that trade, and I'm okay with that. Um, and then once price broke this, I would have been looking for price to pull back here. It didn't happen. Once price broke here, I would have been looking for it to come back here. And maybe that's a trait of UJ. I don't know. I don't I don't trade UJ, so I couldn't tell you,
Mhm. Understandable.
but you can, like I said, you can only sell it down to this zone. And then once price came to that zone, and broke structure, right? That was your break of structure. This was your swing high. So of course you're looking, oops, oops, oops. Um, and this is the internal swing. This is the first internal swing. And internal swing high. Then I would have been looking for, so it broke, it then pulled back and created another. I want to see it break or pull back to the 78, not even the 78. I just look for the last down candle before the up move, which is right there, but you can't see it. There you go. So once price came into my zone, the one I just deleted, it's in my POI. Once it's in your POI and then starts breaking structure or shifting structure, then you can start trading from that zone. Again, like I said, I would be looking for price to pull. Oh, it did pull back. I forgot. I would be looking for price to pull back to that zone to then continue buying up. Price broke structure. So now I'm looking for price to pull back to this zone, which it did. And I know you can't see it, but wait a minute, hold on. Let me delete. Let me just use that line. Let me just use this. Then I would be looking for price to pull back to my demand zone to then buy it up. Once price breaks this structure, then I would be looking for price to pull back to this demand zone to buy it up. Wash, rinse, and repeat. Um, wisdom. Wisdom. I'm feeling some kind of way because you asked Todd the question and not me. So, but go ahead. Ask your question. What you got? I'm just playing wisdom. Go ahead. Wisdom. Hello.
Yes, I'm here.
Hi,
Greetings,
wisdom.
everybody.
Hi there.
Yeah, yeah. Greetings, everybody. Okay. Well, the question I asked Mr. Todd about,
Third Todd.
clarity. I'm beginning to have clarity while seeing what you do here. But I think Mr. Todd trade a little bit different from you.
Yes.
Like, he uses FVG and you do supply and demand.
Yes.
So while I'm still progressing, I just want to be sure that I can actually get market structure at least 100%. I don't know if it's possible, but I also want to ask you a question to do you at times make a mistake when you're marking out market structure at some point?
You say, do I make a mistake? You say,
At
do
times, yes, in your
the,
yes, at some
yeah,
point. Oh,
it can happen. It can happen. Yeah, even as I find I consider myself an advanced trader. Yeah, it's very rare.
okay,
It's very rare, but it does happen.
okay.
And
Okay,
so
okay,
just to annotate where so this is where Todd would trade. This is the let me imbalance. Imbalance. This is where Todd would look to trade from, and this is where I would look to trade from. I would in this somewhere in this zone. And I'm going to always cover the low, the swing low. Mm. So it's about the same, but I like to be very precise on my trades. So, and then that's a what time frame are we on? Woo, that's a lot of pips. But let's go down to the 1 hour. So I would mark up this zone here. So mine would be a little lower than Todd's. My zone would be a little lower than Todd's. I would cover this swing low here. And what I'm trying to get to is um price my stop loss or hedge no more. This is a currency pair. 25 pips is more than enough. See, I'm going to narrow my zone down to here. I would be here, and then I have a zone here, right? So those would be my two zones right here. Um, as you can see, there's also an imbalance there. I would cover this candle here because this is the last down candle before this up move. So I would want price to come down here. As you can see, there's a little imbalance right here as well. So I would assume that Todd would make, I'm just making that assumption because I don't trade like Todd. We may have the same end result, but as far as entries and exits, I'm a little different. So now I want to narrow because I'm on the 15-minute. So now I'm narrowing my entry point. I'm there. Oops. I'm narrowing my entry point. That's 22 pips. I would bump it up to 25. So I narrowed my stop loss, my risk to 25 pips versus 114. Does that make sense?
Yes, yes, it makes sense.
And if you want to be for sure, if you're willing to risk 30 pips, you can do 30 pips. Just in case this low gets swept, um, I would definitely put maybe 30, no more than 40. A US currency pair, there should be really no more than I say 20, 25 pips. But I know that Andrew is 30, he used 30 pips, but it shouldn't be no more than that, to be honest with you.
Okay.
And so if you're gonna buy it from there, then it should go to your next swing high. This is your swing high right here. Or if you, I see a, no, I don't. Hold on. But yeah, this is where I would take it to. So it may come up here and start selling. I can see right now this is probably around the 78, 88 if I fib the down move. So this is around the 88. So if you want to just take it up to your 78 or your 88, you can do that as well. It's 973 pips, which is more than enough.
Okay. So can I ask more questions?
Yes.
Okay. Now this is where I have a problem
Hold on.
when I'm trying to get my swings.
Hold on, Wisdom, because I'm going to pull up your chart because I want to say you had a perfect chart. You had a perfect chart. Okay. And you marked up your the second time you marked up your internal and the first one you marked up the higher time frame. The second one you marked up the internals to that. Um,
And that's what confuses me at times to because I'm really focused on the higher time frame swings. So at times finding the internal swings on the
so
higher time frame,
so let
I
me ask
kind of make some mistakes.
let me ask you this. Are you a swing trader or are you, because that's really the determining factor. Are you a swing trader, intraday trader, or um
Well, I'm a beginner trader, just that I've
what
been
is
on the pursuit of
what is your plan?
like okay, my plan. I would love to do scalp or day
Ooh,
trading based on my capital. So
okay.
here it's not yeah,
But
yeah,
I don't
based on my
scout.
capital.
I don't scout. Ty doesn't scout. And
Okay.
um let's see. Hold on a second. Let me see what chart you had.
Scalping is
Had you
dangerous.
you had UJ too. Okay. You had the UJ chart. Okay. Let me just do this. So you were on the daily and then you marked up, yes. So you marked up from here to here to here
Yeah.
to here. So right now, this is you can't mark this up yet until either this high is broken or this low is broken. So right now, all this is in between.
Yeah, yeah.
And then you came back and you marked up, let me see, on the weekly. Oh, you marked up. Oh, that was a whole nother chart. Okay. So no, this is perfect. This is fine. This is fine. So what's your question from here based off of what you marked up on here? Wisdom?
Okay. Yes. Yes, madam.
What's your question from here?
Yes, madam.
What's your question based off of what you
Okay. My question is that for me, I'm only seeing the swings from the higher time frame. But when Satot comes in here, he marks kind of the substructures, and I'm like, wow, how is he doing that? He marks the substructures and nowhere he could even pick entry from the smaller time frame, even while looking at the higher time frame, which is the daily. So
okay.
I'm only seeing the swing on this daily. That's the only thing I can see
Okay.
actually now.
Okay, so listen here. So if you mark this up and if you were looking to your left first, you got to look to your left. You got to squeeze in and look to your left, right? This
Okay.
this was a break of structure. This was a swing low. This was your swing high, right? Once price broke this high, this became your swing low. Once this started selling, it should have come back to this zone here, this zone here to start buying, right? But
Okay.
if if you're looking at the internal in between here, you have to, so you had this, you had this, you had this, you had this, then you had this. Price would have had to break this high if price was going to go back bullish. It didn't.
Okay.
Came here, broke this low, broke shift of character. It broke below the swing low. So now you have this swing here, which price would have to break this high in order to buy it back up here to sell it. But price came here, pulled back, didn't break this high, and broke this. So as every time you see a swing, you just should assume that price is going to pull back to that zone to sell. Okay.
Okay, and I
So
have a question too.
Okay.
yep. So once price pulls back to that zone, now I'm just gonna set the limit. I'm gonna tell you right now. I'm gonna set the limit. And then you can always sell it back down to the low. So from here to this low was 523 pips. This low right here. Because price could have come here, either swept it or just started turning back around.
Hmm.
But once price broke the low, broke right here, then you look for price to pull back into um another supply zone to then sell. But it didn't pull back to there. It came and broke again. So now you look for price to pull back into another zone to sell again. And although it sold, what did it not do yet?
It hasn't get to the last swing there.
It did not close below this internal swing. So for me, price, this is the last internal swing. You just have to look at your swings and trade your swings. It didn't go below, it didn't close below this internal swing. So my guess is price is going to keep pushing up until it breaks your swing low or your swing high. Price will continue going bullish until it breaks the swing. So if price broke this swing here, I would be looking for price to pull back up into somewhere up in here and then keep selling down to this. Does that make sense?
Yeah. Yes.
Kind of sorta. Okay. Marcia, did you have a question in here about this one?
I think you might have answered it, but I think you were saying, okay, so when it closed above the high,
Which one? This one?
right? They what you was demonstrating. Wait a minute. You can go all the way back to closer to the bottom when he was asking you and explaining it to him. Go over just a little bit more. Where that arrow at to the top, with a pink box.
Right here?
Yeah. So it's still currently going down, right?
Right here.
Yeah, still going into more like you should
Until
stay in the
until it closes below here or
mm-hmm
closes above here.
above.
Everything
Mm-hmm.
else is in the middle. Like this is
Oh,
in the
okay.
middle.
Gotcha.
Now, because price did not close below here,
Mm-hmm.
excuse me. And so on here it closed. On the 4 hour it closed, right?
Mm-hmm.
So you either need to, it's either going to buy up to this zone here, because remember, I'm usually sitting on the 4 or the 1 hour. So if
Okay,
it
for the one
closed
hour.
below here, then you want price to come up here and show a shift in structure from this zone here.
Okay. Okay.
Now, there's an imbalance there. So if you trade imbalance, then you can trade the imbalance. There's a little tiny imbalance there.
Mm-hmm.
I'm just going to mark up hold on. Let me just do this and put imbalance. The imbalance starts there. The imbalance ends here. My zone would be right here, this last candle before the down move. So once price got to your imbalance, you can just set an alert. You identify the internal structure at that time. So once price came up here and there was this internal structure, and you see a change in structure, then you can get in to sell it back down. I would sell it back down to this low, or you can sell it back down. If you're a swing trader, you can hold it all the way down to there. But you want to look at the structure as it's forming, because the internal structure as it's forming, because price could keep going and keep going and keep going and keep going and break above, right? And then come back, shift structure, and then sell back down to, this is where I would be looking to sell it back down to. If price breaks this high, I'm looking for price to pull back to this demand zone. Then I would sell it down to here. Does that make sense?
Yes.
Yep.
So once price gets to your POI in your zone that you've identified, which is one of the things you have to do before you jump in any trade, identify your higher time frame swing high, your higher time frame swing low, and then identify your structure, your I'm going to say supply and demand based off of that higher time frame swing high, swing low. Okay. Once you identify your supply and demand zone, because a supply and or demand zone includes an imbalance. So if an order block is pretty much an imbalance. Um, so if you see once you see the zone, you identify your zone. if price comes to that zone and shifts structure without breaking the swing high or the swing low, then you know you are trading back down to your swing high or low. Sweet, you're trading back to the swing high or swing low, if that makes sense. So here you have your swing, your high. We're looking at, let's just say this is just higher time frame swing right here. This is 4-hour swing, but say no, let's go back to the daily because this is what we were talking about. And I'm gonna just go to the weekly so I can get rid of that noise. So you have, this is your higher time frame swing. When we say trade your edges, this is why I do not trade the 50% 618. I this is what I mean by trade your edges. Your swing high and or your swing low. You're going to trade from this zone or you're going to trade from this zone. That's your edge. So based on the edge, my hedge is here. Let me just type that in. Based on your edge, my hedge is here, or your stop loss. You can do a stop loss too. You don't have to trade, you don't have to do a hedge, right? My hedge is here because I'm bearish. So I'm looking for price to come here and continue selling, right? So this is what I'm expecting. I'm looking for it because price is bearish. I'm looking for price to come here and sell back down to this zone. Okay. Now, if I have a hedge and the hedge kicks in, the hedge should come up here somewhere. There's no imbalance. This is the demand zone, and then possibly pull back um to then sell back down to here to then continue buying up to here. Does that make sense? So if I'm in a hedge, I know that price is going to push because we broke this level of structure. I know we'll probably pull back to this supply zone here. The hedge will probably buy up into this supply zone here and then start pulling back to buy into this demand zone to then take out or trade up to these highs. So if I'm in a hedge, I'm taking my money here. If you're in a hedge and you don't know how to trade the hedge, then let the hedge come up to your zone. Your hedge has to come up to a POI, okay? And then once the structure pulls back and your hedge is at 0, so once the hedge kicks in, set your stop loss to entry. Set your stop loss to entry. Well, give it time to push out first. Give it time to start breaking structure and then set your stop loss to entry. So once the hedge pulls back, then the hedge will take you out at entry. You're probably going to get a market structure shift for this hedge that was set. Then your original entry will be in profit, and then you can set um another entry to then start selling based off market structure. You want to see the structure first. You want to see a break of structure, a pullback, and then a continuation of structure. And then set your TPs. I cannot stress that enough. I see that so much that people don't set their TPs, that think price is going to go so much further. It doesn't matter because if price then turns around and break structure here, right? Based off of structure, you know you're going to get a pullback. You can get in again to start selling back again. If that was the case, if price then to, if you took your hit your TP, take your profit because you want to build your equity. Take your profit because you want to build your equity. Take your profit, okay? If price is going to continue selling, it's going to break these lows. And we had already marked up the higher time frame. It'll break these lows. We already marked up this as the higher time frames swing, right? So if price breaks below here, it's going to pull back. You can get in for the sell back down, mark up your next demand zone. This is the next demand zone. So you'll get in on a pullback and then sell the next trade down to here. Like, take the profit. I cannot stress that enough. Take the freaking profit. Because as you're taking profit, you're building equity. And my advice to you is take the profit, build your equity, continue using the same lot size. Don't try to go up in lot size unless you know what you're doing. Um, don't try to go up in lot size because you're building your equity. Just continue trading the same lot until you get to your zone, build some more equity. I personally, for every $100, I trade $1. And I don't even trade the exact, I don't even trade the, uh, I just trade a 0.1, whether that equals to $1 based off the pip calculator. I don't care. Okay. That 0.1 can be 0.6, can be 60 cents. I don't care. But for every $100, I trade a 0.1. For every 200, a 0.2. 300, a 0.3. But I'm also trading off from the edges and not based off of um these inner structures, internal structures. So I'm trading off this edge or I'm trading off this edge. I'm not trading off this stuff in the middle. And just to go back and reiterate what I do on Saturdays or Sunday, I do exactly that. And I'm gonna go to GJ because GJ is what I trade. Okay. Um, I go to my daily. So the last daily I marked up, this was the last daily I marked up. I had already been expecting price to pull into this demand zone, right? Because price broke structure here. And then we had this break of structure here. So I was expecting price to pull into this demand zone. Y'all can ask Andrew. I told him for almost a month, price is pulling back into this demand zone. So once I got this break of structure, price pulled into my demand zone. I was then expecting price to break this high. Okay. Now that price has broken this high, my demand zone, my current next demand zone, based on my daily, is right here. So once price breaks, I'm looking at my last swing. This is my last swing on my daily, right? So now price has pulled back. Price did not pull back into my demand zone yet. based off this internal structure right here. So I'm expecting price to pull back into this zone here based off of the structure up to these highs. Okay. So I'm trading from either here or here. This is my current structure. Now, if price comes here and breaks this structure, I'm going to look for the pullback. I'm not even going to look for the pullback. I'm just going to wait for price to pull, set my alert, come to this zone, go to the 4-hour, 1-hour, identify the structure, look for a shift in structure, and then trade it all the way back from here up to here. So my went from 500 pips to 700 pips, 800 pips. But as of right now, this is the structure that I'm looking at. I have to keep in alignment with the current structure. So I'm looking for price to pull back here. I'll set me an alert. I'll set an alert right there. And then if I go to my 4-hour, right? This is my last structure price. And I think I called this trade out last week or so. Oh no, it was this one here. But price came up here. You see the 4-hour internal structure. There was a shift in structure. Price pulled back to my, why is it? Oh, okay. I see what's happening. Price pulled back to my supply zone and sold down. It did not sell back down to my lows, but it gave another shift in structure, right? And then I think on the 1-hour, I went down to the 1-hour and this was my current demand zone. I mean, supply zone, sorry. So, and of course you have to cover this high. Now this wick took out that high, then came and broke structure. And then this is the one I called out. There was a supply zone here. You cover this high and it sold, it sold down. Okay. So now that prices pushed back up and broke structure, broke this high. Oops. Now that it has broken this high here, that's my swing high. That's my swing low. Okay, wait a minute. Hold on. I just messed that up. So this was a shift structure here, a break of structure here, and then a break of structure here. So if I now move my swing high to here, price broke that structure, price pulled back into this demand zone and is now pushing up. My TP, which I am in this trade, and I'm sure I went down to the 15 to narrow that down, and I'm just go down to it so I can show you what I did. So you have, now whenever I go to my 15 and I have 2 red candles, I just mark up the 2 red candles. Okay. But as you can see, the 15-minute institutional candle would be right there. That's what I would have marked up. And as you can see, that got me in sniper entry. So Oh shoot, hold on, y'all. My computer's about to die. Um, okay. All right. So as you can see, price pulled back to that zone, and I'm taking my TP to this high. It's probably going to go further than that, but that's where I'm taking it. It could go further than that. Let's just say that. So that's, and I was going to say only 279 pips, but it is 279 pips at a 10 lot. So I'm good for that. I'm good for that. And then I'm gonna take my profit. I'm gonna take my $20,000, and then I'm gonna wait for the next move. If the next move doesn't happen till next week or whenever it's gonna happen, then I'm okay with that. I took $20,000 for the week. And if price then comes and breaks this high, if price then comes and breaks this high, close above, right? On my 1 hour or 4 hour, if it closes above, then I'm marking up my next demand zone. My next demand zone is right here. And then I would mark up this zone here. I would cover this low here. And then take my TP up to wherever that break of structure high is, wherever that high is. Does that make sense?
Yep.
Yes.
Any questions? No questions? New Christians?
So you don't see it pulling back at all before it gets to that TP?
Before it gets to this TP?
Yeah.
It could. But because I've got a sniper entry, I'm not expecting it to come back here.
Okay, yeah, that's true.
It could come back. It could come back here, which is a little 15-minute demand zone. And then start buying up. Pull back.
Yeah.
Like it's gonna pull back, and I'm expecting that. But because I got in, because it's broke, change of character, I got in at the sniper entry. I'm expecting price to push back to this high. I'm gonna let it play out.
Yeah.
And I might even add another entry or another, like once it pulls back and breaks structure.
That's what I was gonna ask. Yeah. Yeah.
So it has to break, like once it pulls back, wherever it's going to pull back, because right now it's the high, right? Price has
Yeah.
to break this high before I look for another entry.
Okay. Yeah. Yeah. Okay.
Once it breaks that high, I'll look for a demand zone. If it comes back and picks me up, then I'm in there for
Okay.
a second entry.
Okay. Okay. Yeah. That's good. Yeah.
My question is
Yes.
for smaller account. So I have a demo and I have an account that I put money into. It's just like $100 or whatever. And so what I've been doing is I've just been really practicing more on the demo because it was a $50,000 demo account.
Mm-hmm.
And so I practice on there, and it seems like everything will go good. Then I'll get confident, and I'm like, okay, I'm gonna try this also on my real account. So then I get
So,
to my
so,
real account,
so let me tell you why. Let me,
and
hello. Oh,
I'm still here. Sorry.
okay. So let me tell you why you're confident on that. Because it's $50,000. If you had a demo account to reflect what your real account would be, then there would be a little more emotions in there. So if you had a demo account with $100, of course, the emotion is not as real as with real money, but you will see that, okay, I have to, you'll understand how you have to trade the edges if you're trading a small. uh, That's how I learned to trade the edges. I traded with a small account. So the emotion is not going to be there with $50,000 in the account. Even if you're just trading based off of, especially if you're trading based off of a small lot size in that $50,000 account. So my advice would be if you can get a demo account with $100, um, then the emotions would be there a little more.
okay, I understand. I will have to see what's available. I don't know. It seems like they all are like
Which
super low. You know
which
how they
which
are.
broker
It's
are you
always.
which broker are you using?
I believe it's called top tier. It's either top tier or top one. I don't know. There's a lot
Oh,
of tops, and so it's one of
so
the two.
so you're using a prop firm, a demo prop firm?
I'm using a prop firm, a demo prop firm.
Boo.
Uh,
Sorry, I'm just kidding. I hate prop firms.
I've come to not like them as much, but I was having fun trading with it just because I could just practice. But I
But you have
understand
to
fully
practice.
what you are saying.
Yeah, you have to practice with something that's close to what your real account would be.
Wowzers. Okay. So I just have to look around and see what's available. But I do want to um, just, gain a little more in in the real account. Like, I don't know.
So
I just got
you're not supposed to be trading your real account yet in the beginner session. You're not even supposed to be trading yet. Hold on, hold on, hold up. Um, but if you're going to trade, I'm recommending to trade in a demo that it be close to what you're planning to put in your real account. That's my advice.
okay. I got to see how that works. I got to figure it out, but I'll find something.
And if you,
Him.
uh-huh.
Oh, I'm sorry. Oops, I'm sorry.
Oh, oh,
I'm so sorry.
hold on. Let's see what Wisdom has first. He raised his hand. He- yes, Wisdom.
Yeah, hello, Mrs. Kim. Sorry, I want to share my screen. I just want to get something clearer again.
Okay. Give me just a second. Let me ask Wisdom, I mean Marcia her question and then we can switch the screen.
Okay, 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 no problem.
Yeah.
Um, so this is a beginner's course, and and are we not? I thought we weren't trading. I'm
No,
just confused because
we're not trading yet. We're not trading yet. No,
oh, oh, okay,
not
gotcha.
yet. Nope.
Okay,
Okay.
yep. Thank you.
No problem. All right. Wisdom, you can share your screen. Oh, dang, y'all had questions? I was tripping.
Okay, thank you so much. Let me do that right away. Okay, can you see my screen, Mrs.
Yes.
Kim?
Yep.
Okay. So one of the question I want to ask is this: how in should I zoom like how in should I go on the screen so that I could be able to see the market structure from a from a very clear perspective? Like
Zoom
looking at this here now. Can,
zoom it in some more.
okay.
You should be able to see the full chart.
Okay.
Okay. And
How full?
if you
On
zoom it
the
in a
right
little,
hand.
zoom it in a little more, because I just want to show you, because I know what GJ looks like. Put it on the what time frame you on? Put it on the monthly.
Okay, on the monthly.
Yep, put it on the monthly. Now, okay. All right. Now, but since you're there, okay, leave it there, right? And uh
Okay. Oh.
uh-huh. Yep, hold on, hold on. Let me see if I can find the annotation tool. I think because you're on your okay, can you let me share it real quick because I can't find the annotation tool.
Okay.
Okay.
Okay. Okay.
Um, DJ. All right. So, and I'm going to clear all this off. I'm going to go to the monthly, and this is what I see for GJ, right? I see we have a breaker structure here. So, higher time frame. This is my swing high, and this is my swing low. Okay. So if I fibbed from here, because as you can see, price that is bearish. This is a bearish swing, that whole swing. So if I fib from here to here, and I'm gonna just add this here. I'm looking for this to buy up to the 78 or the 88 before we get a um, big swing to the downside. So
Okay.
if I mark up my supply zone, this is my supply zone, or I can even mark up this one. I can even mark up this one here. I'm looking for price to come up here somewhere, one of these zones, and I'm just gonna mark it up. I'm looking for price to come in here and sell all the way back down to here. Let me just mark up this one. Okay. Now, within that zone, here's the last structure that we're in, right? The last bullish structure, it pulled back. So now I'm expecting price to buy and break these highs and then pull back to in here and then break these highs, pull back into somewhere in here, break these highs, and then come in here, shift structure, pull back, and then sell all the way back down to there.
Yeah.
Does that make sense?
Yes, sir. Yes, ma'am.
Okay. Now, if price, if this move right here breaks this low right here, if this breaks this low, right, then I'm looking for the pullback to sell back down to here and then buy back into here. Does that make sense?
No, not really. Not really.
Because this is your swing, this is your swing low, this is your swing high.
Okay.
So if price breaks that swing low, if price comes and breaks this low, then you'll look for a pullback to then sell back down to here.
Okay.
But because price pushed up, pulled back, pushed all the way up, pulled back to about the 78, you're going to look for a continuation of a buy. So
Okay.
see how it pulled back to the 88 actually. And so now I'm looking for price to continue. It didn't break the low. It pulled back here, did not break this low. So now I'm looking for price to continue buying. That makes sense?
Okay. Yeah.
And then once price breaks this high, you'll look for a pullback somewhere to continue buying up into this POI. Once price gets into this POI, which is also the 70. Okay, so we have oops. So you have the 78 here, and then you have the 88 here. So once price pulls back into one of these zones, you identify the structure. You identify your structure, and as long as price is giving you bullish structure, you keep buying until it gives you a shift in structure.
Okay.
Okay.
Yes, madam.
And then once you get a shift in structure, you look for your supply zone or your imbalance, set your limit, and then you can sell it back down to this zone. Because at this point, this would be the higher time frame structure. From here, oops, hold on. From here to here to wherever this goes, right?
Yeah.
And then once you get that structure, then you'll look for um, your premium zone. So wherever that goes, wherever this may go, um, and then you can trade it back down to the 78,
7.
88. So even if that goes all the way up to here, and then if it pulls back to the 88 or this somewhere in between the 78 and 88, you can buy it. Oh, no, 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 no. So if it pulls back into this zone, right, without breaking this high, then like I say, you can sell it back down to this zone. If it does not,
Yeah.
if it does not break this high, this is the structure, right? This would be the structure. This would be the higher time frame structure. So from here to here to here to here, because it might just keep selling back down to the negative 27 based on structure. Does this make sense? That
Yes, madam.
this is the higher time frame swing. Price can pull back into the premium zone to continue selling to the downside. However, if price does break this high, then I would be looking to sell back down to this zone and buy from this demand zone to the next high. But you have to trade what you see and not what you think. So once price got here, that's when we have to determine whether we're going to sell to this low or whether we're going to sell to this demand zone to then continue buying. One of the two. So if you look at your question was how far back to look at your structure. As far
Yeah. Yes.
as far back as it will give you. That whatever information is given to you. This right here is the information that's given to me, which tells me that price is bearish, right? and that price is likely pulling back up to the 78 or 88 to continue possibly selling down to this to these lows. So if you're
So
so I know you say you want more of scalping, but if you were a swing trader, or if I was a swing trader, I would sell somewhere from up in this zone if I was a swing trader. But for me, I'm just going to sell from one zone to the next, from one swing trade, swing high or swing low to the next swing high, swing low. So I'm trading the edges. This is an edge, and, and this is the edge. I would definitely sell from wherever this goes back down to here. Does that make sense for everybody?
yes, ma'am. Yeah.
Yes.
So I want to ask another. So
Yes.
from what you've shared now, do you
Mhm.
mean that whenever one we come to the market, okay, or a chart, we should start from the monthly time frame so we could get a broader view and a more um
And the only reason I did monthly is because I wanted to see all of the chart. I wanted to see it all. I could do it on, I
yeah,
think I could have done it on a weekly. So it doesn't matter long as you're looking at the full chart. There's no more data over here, so I can see that on the weekly. If I go to the daily,
okay,
I don't think I could see it on the day. I don't think, yeah, see it's not going to show me what's over there on the daily. And because I know GJ, I knew I wasn't going to be able to see it on the daily. But I knew this was a break of structure. I know I've been
okay.
knowing since um around 2022 that price was going up to this 78. And of course, you can trade the pullbacks, right? But you still have to identify the swing structure on this higher time frame. So once price pushed up here and pulled back and now pushed up here, this is my swing that price pulled back to the demand zone. Price pulled back to this demand zone. Okay. Pushed up and then pulled back. Let me go to the daily. And then pulled back to this demand zone. Broke this swing high. This was the break of structure here. And then this was the swing high where price broke above. This was the swing low. Price broke above the swing high. So the next zone I'm looking for price to come back to and buying up is from this demand zone here. Now, will I trade the sell down? I could, but I need to see more structure formed in order to sell back down. Because right now you have this here, you have this move here based on the daily structure. So if price broke this high right here, I just need to see this high broken right here to then trade from, make this my swing low for possible either pullback to sell or, I mean, pullback to buy or a break of this low, a pullback into this zone, and then sell it down to here. And then I will also turn around and buy it from here. I would look for the shift and then buy it back up to wherever these highs are. So as of right now, we're in this structure right here. Did that break? Let's see if that broke. It did. So I'm looking for a pullback somewhere in here. As you can see, based on the daily, I don't see a demand zone right away, right? The only thing I can mark up is this low right here. This would be my edge right here. If price breaks that low, then I'm looking for the pullback to then sell it back down to here. And that's just my wash, rinse, and repeat of how I trade. But based off of structure, based off of market structure. So as you can see, price broke on this 4 hour, price broke this high. So I'm looking for price to pull back. There's a demand zone here. I think this is probably the 618. So I'll definitely set an alert versus setting a yeah, see that's around the 618. So I would set an alert here at the top of the zone, and I would wait to see if I saw any structure shift. And if I see a shift, then I'll trade from there, from that 618. But normally I want to see price pull to my 78 or my 88. So I'm setting an alert here. All right. It is in it at anything past the 618 is a discount area for me. But like I said, 78, 88 is my jam, is my zone. And based off of the internal structure, you had this break. So price was pulling up, price pulled back to here. This break here, price pulled back to that zone. So I'm looking for price to push back up to these, back up in here somewhere. And then maybe push down. But this is my zone right here. This is my this is where I want price to come back to. Any questions? Any other questions?
Yes, I
Yeah.
wanted to know, do you, Ms. Kim, do you stick with two pairs to trade like often that you just do every week, or do you mix up your pairs and you just go with whatever setup you might see?
I trade GJ only.
Oh, oh.
Mm-hmm. I trade GJ only. Every once in a while, I'll trade US 30, but I only trade GJ.
Okay. And then my second question for you was you or when you when you first got started doing trading, did you start with a small account or did you have like a couple thousand you could do?
Started small.
Okay.
I started small. Um, you can trade a small account. Like I said, you have to be very precise with your entries. Trade the edges. I've taken $100 to 30,000 in 3 weeks based off of um a point one per every $100.
Wait a minute. Can you say that again?
I
You say
took
you did what now?
$100 to 30,000 in 3 weeks.
Okay. That's something I've never heard of before. I thought that, or I was told I was too ambitious to even think of something that could be possible like that. So that's pretty cool.
Possible, but I don't I don't hop in every trade. I don't have to be in I was never in a trade like every day or every week.
Mm-hmm.
I pretty much trade the structure, like
Yeah.
here, like this break here, got in here, got in at a zone here and take it to the top.
Uh-huh.
Then once I do that, say my count is at $500 by that point. So now I'm trading a point 0.5. Once I get a shift in structure, then I can sell it back down to the next um the next demand zone. So so right here we have a shift in structure. This is the low, this is the high. It would have to break this in order for me to sell it back down, but it doesn't make sense for me to sell it back down if it breaks here because then it's already in my zone. You know what I'm saying? So I'm like I said, I set an alert. If I see any kind of structure change, if I don't see it, then I'm waiting for it to get to this zone here because this is the higher time frame structure. This here. So I'm waiting for it to get to this zone. Go down to a lower time frame, look for a structural shift, and then I'm trading it back up to this high. So now if my account is an extra $800, so now I'm trading a point 0.8 back and forth. Same way, same thing. So every week and because I know how to stack, once I see a structure break, then I can start stacking. And y'all will learn what that is. I think most of you already know what it is, but like I was just telling Mike, like I am not stacking until price breaks my swing high. Okay, so price would have to break if I'm trading internal swings, price has got to break my swing high, right? Break, darn it. Pull back to my demand zone. It has to break this swing high, pull back to my demand zone, and then break this swing high. This should have been a swing high. Pull back to my demand zone, and now price has to break this high, and I look for my demand zone. And now that price has broke that high, then I'm looking for my demand zone. And then if price breaks this high, then I'm gonna look for the next demand zone. If it doesn't break the high, I don't do nothing. I do absolutely nothing. And that is key to losing trades. Market structure. And I get it. I get it. Most people are very anxious and want to be in a trade almost every day or every week. But if you're patient enough to wait for price to pull back to a supply and or demand zone, and you see that you're in profit from those zones for 2, 3, 4, maybe even 5 days, I think you will start being a lot more patient to wait for the trade. Yes, Marcia.
Yeah, so my question is when price come to the swing high or your area of interest.
Mm-hmm.
Now, when you say closing, not closing, but I get confused on when you say it breaks your area of interest.
Close candle for me. For me. That's for me.
Oh, it's a closed candle. Oh,
That's for me. Now, Todd will teach something else.
okay.
Todd,
Oh,
Todd's,
okay.
oh, Todd's breakup structure is a wick.
Mm. Oh, okay.
So,
So a closed candle, it would have to close below the zone.
or above.
If
below
you look
or
at,
above.
oh, okay.
And that's your swing, below and above your swings.
Mm, okay.
That's just how I trade, right? So
Mm-hmm.
if I have I don't know if that's a real breaker structure because I don't know if that closed. But let's just say for the sake of this is a, like, I need to see price for structure. I need to see, for structure. I need to see price break this low. And if I zoom in, as you can see, price did not break it, right? So, but I know that Todd, okay, let's start here. So you have this break here. So that makes this your swing high, and then this your swing low. Okay. So for that one, it did break. Okay. And you can zoom in and see, I think, oh shoot, that didn't break either. Oh, yes, it did. Hold on. That's why I have to be very precise with my structure. Okay, as you can see, that closed below that low, that was from the high, right? Where did I put?
Mm-hmm.
All right, so once price pushed up, pushed down, it pulled back into this edge, this supply zone. Like I said, if I don't see the imbalance or order block, I just mark up the wicks, from the body to the wick, the high of the wick, and look for the sell back to the low. So from here back to the low was 79.80 pips. And I'm okay with taking 79.80 pips. Again, or if you're trading $1, that's 80 pips to build your equity. And I want y'all to be okay with that. Yes, we try to look for 100 pips, but if you just trade the swing from the high to the low, if it's just 80 pips, $80 will help build your equity. Okay. So now that price closed below this low. So now I move my swing low from there to here, not big of a difference. And then, my swing high, and then my swing low is here. Okay. And this is I should have kept that there. And then this is your breaker structure. So now this is your swing high, this is your swing low. That's your breaker structure. So once price breaks that high, if you're trading imbalance, this is your move. This was the imbalance right here. Okay. If I'm trading my demand zone, I'm trading. Remember, I said if I have 2 red candles, I'll trade both the candles. So, and then I'll go down to my 15-minute. Usually I mark it up on the 1 hour. I'll go to the 15-minute. If it makes sense for me, then I'll mark up my 15. And if price doesn't come back to that zone, then so here's an imbalance order block here. And then here is there's no imbalance. So and then and that's already been mitigated. So that would be my zone right here. And as you can see, it would have missed me right here, right? And I'm okay with that. I'm telling y'all, I'm okay with that. So if I'm on my 15-minute and here's my last down candle before my up move, and yes, I could have marked up this candle here, it definitely would have got me in. If I didn't get in, then I'm looking for price to break this last 15-minute swing. Once price broke above it, my demand zone, like I'm going to get in. This is my demand zone. So now I have really narrowed down my entry. But as you can see, the structure was here, here. Price broke that line, broke that structure, pulled back, broke the structure. So, and then shifted structure from this high. It's in your POI. It's in your POI. Once price broke the structure, I look for that demand zone. I set my limit and then I narrow this down to a 22. I will take it to 25. And then I go back to my 1 hour. And then I'm going to take it to the highs. 283 pips. And as you can see, it took out that high, right? And then shifted structure. Because this was a break of structure. This was your swing low. This was your swing high. It shifted structure, pulled back to your supply zone. This was your stop loss or your hedge, and then started selling. Does that make sense? Now, I know when you're on the charts on your own, it's going to look crazy. It's going to be crazy, okay? But I just want you, if you just start, I just want y'all to just identify your structure. And I want you to be very intentional. Always start with your higher time frame first. And then also identify your higher time frame structure. Identify your swing points, your swing highs, swing lows. Identify your POIs. And then identify your internal structure once you're at that POI. Or once you're approaching the POI. Yes, wisdom.
Hello. Okay. Um, I just want to get your confirmation on this. When I was discussing about structure with someone, and he says, if a structure is broken, maybe on the bearish trend where you're having lower highs and lower lows, for a lower low to be taken, it should kind of give a healthy candle close below the last swing. Is that is that a good
Can you
is that a good
repeat
okay?
that?
I said, okay. I said, someone told me about structure that it's better in this way. I don't know if it affirms, if it agrees with your own understanding of how you see it. For example, if you are in a bearish trend that is making lower highs and lower lows, and
Mm-hmm.
if the trend is go heading for the previous lower low to continue is heading for the previous lower low to continue the bearish trend. The candle that is going to take the previous lower low will be healthy and obvious to see. It's not going to be so small. And do you get my point? Like the person said, if it's so small, then it's not a clear break of structure. But you were saying that as long as the candle closes below the bearish swing, lower high, then it's a break of structure.
So
For
say
example, like that one here.
for instance, this broke structure, right? But
Yeah,
I
according to
I
you.
I was already No, this is a break of structure. But I was already
Really?
because we were in this structure right here. We were already in this was the higher time frame structure, right?
Okay.
And price pulled back into that demand zone without breaking this low. This was the swing low. Price did not break that swing low and then started breaking highs, right?
Yeah.
So we were still in this bullish structure. So once price did not break this low and started breaking highs, then I knew we were back into our bullish structure.
Okay.
So once price broke this structure, the next demand zone was here. So, and that was the demand zone. This was the low of this push up. So price did not break that low. So price came into your demand zone and started pushing up. It broke structure and can when I say broke structure, candle close for me. So now
Okay.
I'm back in my bullish structure. And I'm waiting for price to pull back here before pushing up some more, pushing up to these highs. So now we should be looking at a higher low, a higher low, a higher low, a higher low. Then I'll be looking for the next higher low from somewhere around here. And 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 then we'll be looking at a higher high, a higher high, a higher high, a higher high, a higher high the until we get to this point right here, to the edge. So this is our edge. So until I get there, then I can determine what the plan is. So either price is going to close above this zone here, or price is going to come into this zone, shift structure, shift structure, pull back, and then start selling back down to here. Or it's going to break structure and then pull back down to this demand zone that I talked about to then push back, which is what I'm really waiting on. So I'm really waiting on price to keep pushing up to then pull back and then keep buying to the next high. Because we're in this structure, didn't break this low, price should be pushing back up to this high. Now, in between that, it's going to be some zigzags, right? So
Yeah.
you have to trade what you see based on the zigzags. So if you identify your structure, and I'm on the daily. This is the last daily swing. Everything in between here. So prices either got to break this high, and if it breaks this high, then I'm going to be looking for this zone, demand zone here. If I think it already broke that high, I think. Um, I'll be looking for price to pull here and push up higher.
Okay.
If price comes and breaks this low, although I don't think it's going to break the low, and matter of fact, because price pulled back to it pulled back to a discounted rate, right? Already. This could just keep going higher. So Once price breaks, which it already did, it broke that price, it broke that high. So now this is my swing low. So I would be looking for price to pull back somewhere to my 78 or 88 to then 78 or 88 to then push high. Every time you get that break of structure, fib that swing, look for price to pull back to one of your zones. And if you get in on a sell, you can sell it back down to the 78 or 88 and wait to see what happens. It's either going to break this low or it's going to respect the low and keep going bullish. Does that make sense, Wisdom? Did that answer your question?
Yeah, it makes sense for me because what I've noticed you said is that once a candle breaks a structure, a candlestick closes at the top of a structure, that's a break of structure for you. And I
Yes.
pick that, and you now say every time price breaks a structure, we should wait for it to come back to a zone,
To the to
which
the
is the
the swing low somewhere in a premium or discount,
yeah,
and then
yeah, before we should take another.
and then and then continue whatever direction price is going.
Yeah, this is a take home for me. Just this you just said is a take home for me. But Mr. Todd have a way he just scaling on the buy and sell, buy and sell. He's so intelligent in doing that. But I think I will stay with this so I can grow because Mr. Todd is so deep and intelligent. But this is kind of safer for me to wait for it to come to my
Mhm.
discount area, and then buy along with it. So
And if
thank you so much, Miss.
you're welcome, but I do want to add that if you're a scalper, so you would be on the 4 hour time zone. That would be your high time frame, right? Same concept.
Okay.
Same concept. Okay. So this was your high, this pulled back, and then this broke structure, right?
Mhm.
So you would fib that move. Oops, wrong thing, wrong tool. So you would fib that move. Price came back to your 78 or 88. And so now you're looking for price to push back up to these highs. That makes sense?
Yeah.
Okay. So now once price pushes back up to these highs, it's either going to break above the high or just wick above and then give you some kind of structure to look for a possible sell or break above the high so you can then mark up the next. If price breaks this high, right? If price breaks this high, then you'll be looking for the pullback to
The demand zone.
this zone here to continue buying. But it has to break your swing high. So even if you're again scalping and the 1 hour is your high time frame, right?
Okay.
This was your, there was no break there. The last break was right here. The last break of structure right here, candle close. So that made this your swing high, this your all this your swing low. Oh, wait a minute. Hold on. Hold on. Let me take that back. This was a break. This pulled back. This was another break. It's this one right here. And then that made this your swing high, right? So now that you have this break of swing high, you look for your demand zone, pull back to, and then trade it up to, you can either trade it up to this high or trade it up to this high. It's all going to be the same. It's still going to all be the same. So again, if you're break of structure, swing high, swing low. It's you see it's still the same. That's why when I hear people say they're scalping, I'm like, okay, that's cool. And you have this is your break of structure, this is your swing high, this is your swing low. Once price broke this structure, what did it do? It pulled back to your demand zone. So based on a scalper, I can't get it right. Right there. There you go. So based off scalping, it broke this high, right? This swing high, pulled back to your demand zone. And then you can take it up to um, then you can take it up to this high if you wanted to. That's 40 pips. But if you're watching it and it gets up to this high based off of a 5-minute chart, your concept is still the same. Price pulled back, price broke up. Price pulled back, did not close below. It wicked the low. It wicked your low, but did not close below, right? And then started pushing up. You got to pull back, and then you got to push up. Then you got to pull back, and then you got to push up. Pull back, push up. Pull back, no break of any lows. Push up, broke this high. Now you had this break of this low right here, right? You had a structure shift on the 5-minute. So you should be looking for price to push back into here and then look for a structure shift or a continuation. So as if you look at the structure here, no break, no break at a high, no break at a low. So now you have to wait for price to either break this high or break this low. If price breaks this high, now you're waiting for price to break this low if you're going to sell, if it's going to continue selling based off of this market structure shift right here. So once price gets in your POI, identify your structure. This would be the next break of the high. If price pulls back, doesn't break the low and pushes back up and breaks the high, it still hasn't broken this high. So you're waiting to see what happens. If it breaks this high, then once it pulls back, you're looking for price to buy from this zone and then to that high. Does that make sense?
Yes.
60 pips. But price has to, once price shift this structure here, you're looking for price to come here and shift structure back to the downside to sell it back down. But you have to wait for that shift to happen. Makes sense. Everybody okay with that?
Yes.
Okay. Any other questions before I go gallivant?
Yes.
You have a question?
Yes.
Okay, go ahead.
So candle closure is definitely important.
Yes.
No wicking this or that or the other. It's just important to make sure that candle close,
So
no matter what time frame.
yes. So because I am a higher time frame trader,
Okay.
wisdom is it says he's a scalper. So based on this 5-minute chart, again, I would be looking for price to come here and sell down. But I would need to see it happen based on structure, right? Now, if price comes up here and doesn't break any structure and breaks the high, then it's all the same because he's trading a shorter amount of pips. Wisdom, how many pips do you trade? Like 20 to 40?
Okay, let me share this first. Like I said, I'm a beginner trader. Me
Okay.
saying that I would love to do scalping is not that I've already started. I'm anticipating based on my capital what I could raise. So I will start from a place where I could float and not feel um, pressure, so much pressure. So scalping is going to be a start for me.
So
Yeah, I hope you understand.
let me just say this. If you're looking for something that is less stress, scalping is not it. Scalping will have scalping is not.
Okay.
I would recommend for you to day trade if you're trying to build your equity on your account. I mean, because we're trading the same thing. It's just that I'm waiting for better entries than you are. Because even if price breaks structure here or comes into the zone and then breaks structure right, you can only trade it down back to this zone. So again, um that is about 45 to 50 pips. And that's fine. That's perfectly fine, right? But then you have to wait to see if price is going to break this low. Once price breaks that low, then you look for the pullback to then sell it to the next low. It's all the same. As Todd mentioned, it's fractal. So whatever you do on the higher time frame, you do on the lower time frame. The only thing with scalping is you have to sit on the charts most of the day to look for this structure break or or the break of this high, right? You pretty much have to be on the chart. You on this 5 minute, you have to be on the chart all day to identify these structures. Because in 5, 10, 15, 20, 25, and 30 minutes or so, or between an hour, you're going to have to see if price breaks this high or come and breaks this low. Now, you could set an alert. Again, I'm going to go over, you can set an alert based on um excuse me guys. You can set an alert. Again, you can use the crossing up, bar close, create, and you can set an alert here. Oh, wait a minute, hold on. Let me redo that. Let me So you can set an alert here and then set an alert here, right? So bar close, cross up. So meaning once a bar closes and crosses above this zone here, it'll give you an alert. Or if the bar closes and crosses down, an alert, crossing down, bar close, you can set an alert here. Okay, this would be the alert I would set. Soon as my alert went off, whether it was up here or down here, I would then, but we already know we're looking for price to come into this zone, right? But once, so I already got a feeling that it's probably going to close above here. Then I would move if price closed here, set off the alert. Then I'm going to move my swing low to here. And then I'm going to move my swing high to wherever that is. And the alert is still set. So until price shows you what it's going to do. So if price comes back, I'll be looking for a price to pull back either to here or to here to keep buying. And as I'm getting more structure, right? As I'm getting more structure, I'm moving my alert based off of that structure. And you can, in the meantime, you can still trade that structure. So if I was going to trade this current structure, I would trade from here. I would cover this low. That's 8 pips. I would put 10 pips and then trade it up to this next high. So that's 26 pips. This is what a scalping looks like. But it's the same way as the same way we look at higher time frame structure and trading based on structure. So this is bullish, right? So then I would look for price to pull back to buy up. Now, if price pulls back, breaks this low, and you get stopped out, then you're looking for price to, based on scalping, so if price pushes up here and then breaks below this low, then you're looking for price to pull back into your supply zone and you're going to sell it down to this low here, which would be approximately, I think I said 45, 50 pips, like 45 pips or even more. And like I said, that is okay. Don't feel any kind of way because I'm an intraday trader. Todd's more of a swing. Todd says he's a swing trader. But just know that when you're trading based off of a 5-minute chart, that you have to trade based on I say supply and demand, or if you want to use the imbalance, whichever one you prefer to use, you have to trade based off of that. Um, Again, if this doesn't take out the high and starts breaking structure to the downside, it is likely coming to take out this low. So if you wanted to take it to that low, then you're looking at approximately 56 pips. If you're trading $1, that's $56. You're building your equity based off of that, whether it's $56 or $560. Okay. It is okay. Does that make sense, Wisdom?
Yeah, yes, madam. Yes, madam. Uh,
Marci Oh, go ahead. Marcia, is it
All right,
Lamisha and
I'm good.
Christina?
I'm good, Kim, but I do have a question.
Yes,
If we mark up a chart, can we drop that in Discord for you to look at too?
absolutely.
Okay.
Absolutely. Yep.
Something
So
to
I
well,
know we I kind of wanted to get through everybody's charts. So maybe out on Sunday we'll go over the rest of the charts because
that sounds good to me.
I do want to go through everybody's charts to show
Okay.
what I saw. Marcia, you marked up your chart pretty good. Let me see.
I was still trying to get familiarized. I know you have a video with the tools. I just didn't know how to get that H
Oh,
the putting
the
the
higher high, higher low.
yeah, I couldn't get it. I mean, I
So you
couldn't.
just mark up well, no, because
Oh,
that's
that's not mine's anyway. That's somebody else's chart.
no,
But
I know. But just to just show, this is
Mm-hmm.
just the text tool.
Mm-hmm.
You can just mark up higher high.
Oh, where you click that at though?
It's
You click.
down, it's right here, this little text tool. And I think you can add it to your right here. You can add it to
Okay.
your favorites.
Mm-hmm.
The anchor text tool is
Mm-hmm.
so you have I have the text tool, the anchor text tool, and the call out box.
Mm-hmm.
So the anchor text tool means that like see when I'm let's see where is it? Right here. Now you're high. So the anchor text tool stays in place no matter where you move the chart. The text tool moves with the chart. So you want to use your text tool instead of your anchor text tool.
Oh, okay.
I only use the anchor text tool is when I'm writing out stuff and I don't want it to move. So if I move the chart, the whatever I write out is still right here. Okay. So um and then if you want to, you can set save as higher high. You can save this as higher low. Okay. So when you're on the chart, you can put let me go to a high time frame so we can see. So when you go to the chart, you can put higher low. And you don't have to make it this big. This is when I was given higher high. And then you can just move it up there. And then you can set it back to 12 or whatever it was. Okay.
Okay.
And then this is your low. Well, wait a minute. Hold on. Let me. Okay. Because that broke structure. Now, this is your. And let me save this. Save as higher low. Replace that. Save. Yes, I want to override it. Okay. You can do one or two things. You can click on it, Control C, Control or Command C. Wait a minute. Okay. Control Command V. Control C, Command V. Okay. And then move. Oh, there it is. Okay. There you go. And there's the other one I did that I had. Okay. So you can Control C to copy and then Control V and paste it and move it. Like right here. Control C, Control V, and then move it. Or you can just click your text, put the text box, right click, higher high.
Okay.
Okay.
Mm,
So this is, I'm going to Control C and Control V this and just put that right there. So now you can either put this, you can do it like this, or you can just set your swing high, swing low. Oh, shoogity. Let me move y'all out the way. Okay. Swing low, swing high. Either way, whichever way you prefer, whichever
Okay.
way you like to see it. Okay.
Yes.
All right. Any other questions on TradingView or market structure?
Not at the moment, no.
Okay.
Is it necessary to upgrade the trading view at this
Um,
time?
um, which are you able to get? What are you able to do on the plan that you have? I'm gonna say
So
no
I'm in a trial.
right now, but
Okay. No, I'm in a trial, so I was just wondering,
yeah, I can't remember. Let me
do
see.
I need the bells and whistles now?
Let me see. New window, TradingView products. I think with oh shoot, let me do that. Pricing. I think with the free trial, you're able to.
I know it right now. I can see like the different because like in the if you don't have an upgraded version, you can't see a lot of different time frames, like a
Yeah,
2 week or
yeah,
12-hour, 8 hour, stuff like that.
yeah. Um, basic. Okay, so you can one chart, number of saved charts. Show all features. And let's see, you get customizable charts, 7 years of data. I'm trying to see if it tells me which time frames you can get. Multi-time frame analysis. So it's saying it says you get multi-time frame analysis, but it doesn't tell me which time frames. Check to see which time frames you get. If you can get the 4 hour, the 1 hour, and the 15 minute, then I think you'll be good without upgrading for now. Oh, okay. So you only get the daily, weekly, and monthly. So you're not able to get the 4-1. Okay. So it's up to you. You only get the daily, weekly, and the monthly. Um, are you more of a swing trader, Lamicia?
Swing is that multiple weeks, like something like a once a week type of.
Okay, so you're more of an intraday trader. So, yeah, I would say you're going to need um to upgrade. But I think you only need to go up one plan, which is the essential for $13.99 a month. Oh, wait a minute. Hold on. Let me see. That's annually. If you pay monthly, it's $16.95.
Okay, great, thank you.
Mhm. You're welcome. But you can try it for 30 days. It allows you to try for 30 days. So,
Yes, I'm in the trial network. That's helpful.
okay. So, yeah, to answer your question. All right. Any other questions?
Not really. I think we have to digest this one first so that we don't get
Yeah.
ourselves confused.
Yes. So what I'm going to say to you all is,
Mm-hmm.
as always, find something that you want to trade.
Mm-hmm.
You only need a pair. I know Ty goes through a lot of pairs. My recommendation, I used to do that when I started trading and I was all over the place. So my recommendation is to find a pair that suits you. Um, and you can mark up your swing highs, swing lows in the chat, whether it's on the daily, on the 4 hour, or the 1 hour. Um, and at some point, you'll have homework where you have to do all three time frames. So I suggest you start practicing now, and and then you can drop them in the chat, and both Todd and I will give our recommendations. Okay.
Like a plan, Kim.
All right.
Great. Thank you.
Thank you
Thank
so
you,
much.
Kim.
You're welcome. Enjoy the rest of your day.
Okay.
Yeah,
Thank
you
you,
too.
Madam King.
You're welcome.
We spent a lot of time. God bless
That's
you.
that's okay. That's what we're here for.
Oh, thank you.
All right, guys. See y'all.
Okay. All right.